Welcome to the Real Estate Investing Club. This is the place everyday real estate investors gather to share their best stories, biggest insights, and favorite tactics to grow a portfolio of cash flowing properties in today's market. Here's your host, Gabe Peterson.
All right. Welcome back to another episode of the Real Estate Investing Club. It is a beautiful Wednesday here in Seattle. I'm loving the summer so far. I hope it lasts longer, but it never does. But it's going to be a good episode. Today we have Charlotte Dunford with us from Johns Creek Capital. Charlotte does mobile home parks, which is great. You guys know I own a couple of those, really like the asset. So I'm super excited to dive in. Charlotte, thank you very much for hopping on the show.
Thanks so much for having me.
Absolutely. I told you before we got here, we like to start with stories. So take us to the beginning of your story. How'd you get started in real estate?
Right. So, the beginning of my story actually started when I came to the United States at the age of 16 from China. That's where I was born and raised for 16 years and came here for high school. My parents didn't come with me, which is myself. I pretty much applied for a high school online, got in, never met the high school, never met the host family, but they arranged me with the host family. So I hopped on the plane and flew to Philadelphia. That was 16 years old.
Philly, interesting.
Yeah.
Why'd you choose Philly?
It was just the first school that accepted me.
Oh, okay.
I didn't understand anything about the United States. Geography. It could have been Salt Lake City. It could have been Seattle.
Yeah, I was going to say, you just really like cheese. Yeah. Cheese
well, that's something I developed later on, right? So I came to the United States at 16, didn't speak English, had to learn everything from scratch, but I decided to really, I made, blending in or joining the American society as something that I was passionate about. I was determined that I had to do that. I wasn't going to be one of those people who have been there for 45 years and don't speak English, that kind of person. So I came early and I made that a goal. And I developed a love for cheeseburgers and hot dogs and all the good American stuff. And the
apple pie and baseball.
Exactly. So America as a country as well. So, and also the love for real estate. So, and then I went on to college here in Georgia, which is why I came to Georgia. Went to Georgia Institute of Technology, one of the top engineering schools in the South, definitely actually in the nation as well. We call ourselves the MIT in the South, and or MIT is the Georgia Tech up north, right? So I graduated at Georgia Tech, moved on to my first job out of college as a business analyst. I started buying real estate on the side using my salary to finance. However, as you can imagine, as a fresh grad of college, it was difficult to finance lots of real estate and difficult to scale up just based on your salary. Despite of getting promotions and raises, it's impossible to keep up with my ambition of scaling based on my salary raises, right? So after one single family home in the south of Atlanta and another duplex up in North Georgia, both performed pretty well, I decided to take the jump to starting my own private equity firm because of my business background, small business background at the time when I graduated from college and my experience working as a business analyst. So it was a big jump for me, particularly because like I said, I graduated college at that time about 2 years ago. 2 years at the time, right? And my husband at the time, I was married, and at the time was still in school at Georgia Tech, studying computer science, and he did not graduate yet. So that was quite a risky move for me. It wasn't like I had an entire 401k or entire savings account of millions of dollars, saving, waiting for me to launch this venture. But I was 24 and bold and wanted to do something great. So fast forward a few years later to 29 now, 5 years later. So I have 28 mobile home parks and lots of really great investors on board, our clients, and growing more and continue to expand in this landscape.
Nice. I love it. Yeah. Coming from a new country, it sounds like you did not speak the language. You didn't speak English when you came over here?
Very little. It's as if you took some Spanish in high school and you say you speak Spanish kind of
Right.
thing. You don't speak
Even
Spanish,
now, I
right?
lived in Spain and in El Salvador for a little bit, and
Oh, you did?
I like people hear me speak Spanish and they're like, "Oh, you speak Spanish?" I'm like, "No, I do not speak
Oh,
Spanish.
yeah,
I understand Spanish, but it's just I could only imagine
it's
coming from a
different.
new country and then
Yeah,
trying to establish yourself both,
right.
in your education and your career, all that. So it shows you got a lot of grit, you got a lot of ability to push through obstacles, which is super necessary in real estate because obstacles come every single day. Um,
Absolutely. Yeah.
let me ask, why did you choose mobile home parks?
So when I tried to get in, I wanted to do, I started with a single family home and a duplex, but I wanted to get in multifamily. So I thought that was the really fancy and nice, glorious thing to do, right? Everybody wanted to get in there. However, I quickly realized that when I talked to brokers and the sellers, they wouldn't even talk to you unless you have 30 years of experience or have huge, hefty amount of cash on hand. So for me at the time, it just was not really possible. And I also saw too much competition. One of my favorite book of all time, 0 to 1 by Peter Thiel. He talks about this blue ocean strategy. He talks about the only reason businesses fail is they fail to escape competition because there's too much competition is a race to the bottom. So I refuse to be in this saturated space that's overheated. You're buying stuff at 3, 4 caps, and it's just extremely difficult to get a good deal. So I'm all about making a good deal. So at the time, I would say stumble upon. Yeah, I looked. I listened to podcasts. I listened. I read books, and I discovered mobile home parks as a kind of a forgotten, you kind of ignored at the time. Now it's getting hotter, but the ignored space. And there's a lot of meat on the bone, and yeah, that's how I found mobile home parks. That's why I
All
decided
right.
to go into the blue ocean.
Yeah. I don't know if I would say mobile home parks are blue ocean these days. I know, we still look for mobile home parks, and cap rates are getting compressed pretty much everywhere, which is, that happens when you got a lot of capital out there. So,
Yeah,
um, so you just chose mobile home parks because there was less competition than in the multifamily space. Totally makes sense. There's
correct.
still a lot of demand for housing out there, so mobile home parks are still a needed commodity on the or asset in the world. At what point, or what was your buying criteria when you first started? Like, what were you guys looking for? What metros were you looking at?
So, well, nowadays we have gotten 28 mobile home parks,
Hmm.
and we kind of look at the deals that are working exceptionally well, and see what is going on with them or why they're working so well. And we look at them and see what did we do right, and we found that there are now about 20 different parameters that we look at, and we pretty much have a proprietary algorithm that we develop inside John Street Capital to qualify these deals. And we have a way to finding the small to medium level mobile home parks, not just the big over 200 pads mobile home parks that everybody wants to chase
Everybody
after.
wants,
We're
yeah.
always in blue ocean. We want a smaller one. So, for example, there's one that we got a 20 lot park that we completed full cycle of last year, and that one had a project level internal rate of return of almost 25%. I think it's 26. So it's very high. So we're all about getting good deals. So as far as the parameters, some of the major ones, number one is tenant-owned homes,
Mm,
right? The mobile home park is a parking lot business. You think of it as a parking lot. Another way to think of it is an HOA for a neighborhood. So you're not really, in the rental business. You're not renting the homes. You don't want to get into the repairing a car, right? So you're in the parking lot. So you're running on the dirt underneath the home. So that's number one. You want to stick with what the asset class is
that
known
that's the
for.
thing that most frustrates me about getting deals from brokers is they include the tenant-owned home rent in the cap rate
I
equation.
mean, the park owned
And
homes?
so park owned home rent. And so,
Yeah.
they'll put out their OM and they'll say like, this is a 14 cap mobile home park. And I'm looking at it. I'm like, this is not a 14 cap. All this
Well, that's,
rent's going to be
yeah,
gone when
yeah.
you buy it. Yeah.
Yeah, exactly, and that's what brokers are there for. They're there to sell the deal, and if you don't know anything, then you're going to fall for it, right? So,
Yeah.
but for us, it's important to only look at the tenant-owned homes, and this is number one, and then utility structure, right? The biggest money maker we think is rent increases because they're really behind in a lot of the homes, and you want to make sure you raise rent for your mobile home park lot rent. And number two, the biggest money loser is utilities. So you want to make sure the utility lines are intact and they're good. You want to make sure you do a camera job. You want to do whatever inspections you need. And then the infrastructure of utilities are important. So we prefer public utilities, preferably sub-metered and billed back to tenants. Whenever the brokerage, whatever the OEM says, utilities included in rent, that just means that park is paying utilities, and is a really difficult situation to handle, right? So you have to decipher, you have to learn how to decipher what it actually means, right? So it's almost a different language. It's the code that you have to understand when you're reading an OM, and that comes from experience.
Yeah. So when you guys, let's say there's a park, utilities included, quote unquote, in the rent, do you guys go there and sub-meter each lot when you buy the park? Do you put on, I can't remember what those little things are in the, you can buy kits that you put onto the water spout and it'll sub-meter it individually, quote unquote. Do you guys do that, or do you just leave it and then base your underwriting on the rent itself?
It depends on the tenant base. We found the most effective just raising the rent and really let the utilities include their rent, because you're going to tell them that, hey, we're going to bill back the utilities, and tenants are going to be saying, well, I didn't use water. How comes I get billed the rent? Because if you don't sub-meter, and sub-meter is another big project, right? If you got the budget for it and then the math makes sense, go ahead and do it. And that is the value add, pretty solid value add strategy. But I would say, the most effective one and the one that received the least backfire was just raising rent.
Just raising rent, yeah.
Maybe because they're already accustomed to that model, and you can't tell them as a landlord you can raise rent. So you gotta maneuver carefully in that space.
Yeah. And that's what we ultimately decided, just because it was just a lot easier just to raise the rent a little bit, and we got a lot less pushback than if we said, okay, now you were billing back the utilities, all this stuff. So yeah, makes a lot of sense. When you're talking about repairs, when you're buying a park, what are the most common things that you guys are underwriting for CapEx? Before we continue on with today's guest, I want to tell you guys about a community I'm launching on School to help investors like yourself grow your own portfolio. In this community, you'll get access to all the docs I use, all the systems I've built, everything I've used to grow my own portfolio, as well as instructions and guidance on how to get out there and find great deals, how to finance those deals, and then how to manage them for great returns. Since we're just launching it, the price will be set at a measly $20 per month, and whatever price you join at is the price you'll have for life. We will be increasing the price as the group grows, so if you're at all interested in growing your portfolio along other investors, now is the time to join. I will put the link somewhere in the bio or on our podcast website at therealestateinvestingclub.com, so if you are interested, head on over there. With that said, let's get back to the podcast.
So the repairs, we would say, is, number one, utility lines. Those are probably the most expensive item. So utility lines, number one. And number two, road work.
Okay.
Number three,
do you guys pave if it's like gravel? Do you guys pave the roads? Or
we don't really repave the roads completely. It just makes the project a lot bigger, and I don't know if it is
really
enough.
Expensive.
Yeah, we would rather spend that budget on infilling. If you really want to drive revenue, you want to infill. Infilling, for those listeners who don't understand, who probably haven't invested in mobile home, infilling is just there are different ways to infill, right? You can buy a new park-owned home and bring it to your park and sell it off to a tenant on a rent credit program, or you can sell it to them straight, or you can advertise the lot and pay some lot prep fees and for those tenants to move their homes in, because again, you're a parking lot, you're an HOA, you're a neighborhood, right? So you run this neighborhood, you want to make sure that the neighborhood is attractive and comfortable for the tenants to live in. So they don't want to leave, they want to move to your park. We actually have parks that tenants just want to apply and live in and buy their own home and move in here. So that's the most cost-effective way and most lucrative way of make money through infilling. So CapEx, road work and utilities. I would say those are the biggest ticket items.
Yeah. And do you guys prefer to buy, park models, bring them in, or do you guys like to market and try to see if you can get people to bring their own mobile home parks into your park?
So we definitely like advertising the lots. And I think especially nowadays, inventory for mobile homes are so low, and that drives the price up. It's not really economically feasible, or really not
especially transportation costs. Yeah.
Yeah, a moving fee is $10,000 alone. And if you get a really trashy home, then that's another headache. Why would you want that, right? So, there are always exceptions to the rule, but I would just say, a mobile home park is a business. If you invest in real estate, it's a business. A duplex is a business. If you rent out your single family home, it's a business. So you got to understand, what kind of clientele you're serving and how that business works to judge it case by case. But I would say in general, it's much better to advertise it a lot, because let the asset do what it needs to do. Parking lot.
Yep. All right. One last question on the mobile home front. You've already touched on this a little bit. You mentioned that raising rents, that's the biggest value add that you guys, when you buy a park, you're looking at the market rents. Is it under market? Great. This is a good value add that we can do. Are there any other value add strategies that you have when you go into underwriting the deal?
Right. So, the deal, you have to buy a great deal to start with, right? It has great infrastructure. That's number one. It all boils down to that. After that, it's too late. So as far as raising the rent, you have to make certain improvements, cosmetic improvements, to improve the curb appeal, get a new sign, add white fences to the park to make it a more homey feeling, country feel for the mobile home park. So you can't just, you can do that, but you may have some pushback if you just want to raise rent like crazy. So you want to make improvements. You want to enforce park rules and regulations, because a lot of park residents, they have really unruly tenants, neighbors they don't like. You know how in a mobile home park that can totally be an issue. So you want to enforce your rules, so it makes it a better place for everybody to live in. So that's number two. That's how you can make improvement to establish stronger management and operations. And another thing, and then the third thing is infilling. Infilling is very effective. Sometimes can be expensive, but probably the most lucrative way to make money. Is infilling to drive your revenue significantly up. And then ultimately, you want your value of the park to be up, right? So it's all about your NOI, net operating income.
Yeah. Yeah, we learned the importance of good management at the very beginning when we bought these parks. We had not great property management in place, and then we got a really good property manager who we have now. She's absolutely kick-ass, and the difference between having a bad one versus having a good one is just night and day. I mean, enforcing the rules, having a good relationship with the tenants for the property manager can make such a big difference for the tenants' experience, at the park, all those things. Do you guys have any tips, any guidelines that you kind of follow when you look for a property manager, or when you think about management of the property itself?
So we manage everything in-house. My partner is the property manager.
Oh, wow.
Yeah.
For 28 parks. Wow.
Right. So, but we're in the smaller park space, right? So it's just, it makes more sense for us. We're in a different game, really. So we kind of So my partner manages is the property manager. So there are certain rules and regulations that we follow. So as far as looking for any kind of contractors, and we always have a local watch person per se to look over
boots on the ground kind of person.
Build that kind of operation. And we do make site visits, but for that kind of boots on the ground, we do assemble a team that during due diligence or shortly after acquisition, we build a team that can serve this part, the repair people, city officials, local authorities, contractors, you do look for qualities like you would look for any kind of corporate employee, reliable, charge, good prices for what they do. They deliver more value than, than what you pay them, obviously, so it's all about hiring the right people. Hire slowly and fire quickly, right? So you want to make sure that you get the right hire.
Yeah, that is one of the hardest things about smaller properties is finding somebody that can help you boots on the ground that still fits within, a reasonable budget essentially. We also buy or not mobile home parks, self-storage facilities, and smaller self-storage facilities. We have a huge, a big issue finding help that is still at a price point that makes sense for the net income that we're trying to generate. So, do you guys look on Craigslist? What's your best way to find?
Yeah, we Craigslist.
Yeah, Craigslist.
No, we actually don't.
Okay.
No, yeah. So we probably a lot of those small mobile home parks in areas where people are not very techy. Like me, I graduated from Georgia Tech, is extremely techy, and so we usually go by referrals, and we
you ask people in the park, hey, who's
local
trustworthy?
Chamber of Commerce. People in the park, maybe it's one source, but it's probably not the only source. So we when you're doing due diligence, right, you hire contractors to inspect the park, and that's a good source. So, you just want to go in a way where the locals do, right? So, because if you operate smaller parks with the mindset of, bigger parks, and, you have to find, people charging high prices, then you're probably out of the game. It's not good for business. So for us, you just have to find the fit for you. And the way you find it is different from the way you find it for other things, because why would it be the same? It wouldn't be the same because it's a different animal.
Yep.
So I would say local referrals would be the best.
Cool. I love it. All right. I just took a peek at the clock. It looks like we have run it down. So it's time to jump into the quick question round. Are you ready?
Yep. Let's do it.
Let's do it. Starts with books or any form of education. I need 2 recommendations. Give me 1 for general life wisdom and 1 for real estate or business specific.
Well, 1 is my whole-time favorite, 0 to 1 by Peter Thiel. 1 for general wisdom is called Traction.
Oh, yeah?
Yep.
I've heard of that. I haven't read it yet, but I've heard good things.
The best book ever.
There you go. All right. Next question is for your younger self. So let's go back to the Charlotte who had 0 experience. She was just coming over from China, just stepped off the plane in Georgia. Oh no, Pittsburgh. Just stepped off the plane in Pittsburgh.
Philadelphia.
Yep, or Philadelphia. Yeah, there you go. Go back to her, look her in the eye, give her 1 piece of advice moving forward.
Relax, it's gonna be fine.
Nice. That nobody said that yet, but I feel like that's really good advice, especially for your younger self. When we're younger, it's so easy to just get like stressed out about making progress. But the key is just to put 1 foot in front of the other over a number of years. And if you just keep going forward, you're going to get to where you want to go. Just chill out. I'd probably say that same thing to my younger self too.
Yeah.
All right. Next question is about your business. The first 3 positions we hire form the foundation of our business. So what were the first 3 positions for you? And would you do it differently if you did it again today?
So number 1 would be accounting department, tax, accounting person. Number 2 was a compliance officer, because we operate in so many different states. We require permitting, foreign registration, not foreign as a foreigner in another country, but different states, right? Foreign registration with the
so
state.
Annoying. All those
you
things.
need someone to handle that who has the legal background. And number 3 is your attorney.
Okay, I love it.
Because we operate in the private equity, they understand SEC regulations. That's extremely important. You don't want to get in trouble with that.
Yeah, for sure. All right, next question is about the U.S. A lot of opportunity out there. Give me the single metro that you're most excited about investing in today.
Wow, that's a good one. Tampa, Florida.
Tampa, okay. People have said every city in Florida. Florida seems to be very hot, but not many people have been saying Tampa. What specifically about Tampa are you excited about?
I think it just has so many different, it's a solid metro. It has a huge population, and it has, I think Tampa just has all the requirements that's met, 100,000, at least 100,000 in population and job growth, economic growth, and diversity in job in employers. And it's particularly for mobile home parks. I think that is a great area, right? So if you say Manhattan, it's probably not the best place for mobile home parks.
True, because there are none there.
So it's different. So you choose your market based on your asset.
Yeah. Tampa, man, I'm brain farting. That's the south of Florida, right?
Yeah.
Okay, that's what I thought. Cool. All right, next question is about lead generation. At all, every deal starts with finding the deal in the first place. So what's your guys' favorite way of finding good deals?
Building relationships with brokers and sellers.
And sellers, okay.
Real estate is and probably will be a relationship business. And technology advances. You want to make sure that we are developing internal algorithms to match that. To make sure that from that's number one. And number two, online perspective, you want to be able to reach to all these people. So as technology advances, as AI technology advances, we want to make sure that we know how to use that. That's going to be the next few decades.
Man, I consider myself relatively techie, and I haven't even thought about adding AI to my business. I'm just like, whatever. I'm sure somebody will come up with a solution.
Register a ChatGPT account. You'll be amazed by it.
I've played around with ChatGPT. I just haven't really thought of. I guess you can school me right now. What are some good applications for AI in your mobile home park business?
Well, right now the AIs they're not mature enough yet to really implement in the business. But what we want to do is that to implement that methodology, for example, training our algorithm, a lot of big investment banks like Goldman Sachs and a lot of really like Blackstone Group, they're training their own AI models, their own software, so that it trains them with financial data again and again and again. It builds an algorithm to help them source deals. It does it better, faster than any humans would ever do.
And okay. So you're just talking about building an algorithm, an AI that can
And when the technology becomes more mature, I'm sure there will be a software that's for that. That's very
for underwriting.
Smart.
Yeah.
Underwriting, and they're already doing that, and that's probably their core technology. And they probably wouldn't hire as many financial analysts anymore.
Poor financial analysts, so sad.
Oh, there will be new jobs, right? New jobs.
Yeah. There'll all be AI analysts going forward. All right, now last question. This is for the listeners. You've given us a lot to think about. I'm sure people want to reach out, get in contact with you. What is the best way for them to do that?
The best way is to go to our website at johnscreekcapital.com. I'm sure you have that in your show notes. And also you can email us directly at info@johnscreekcapital.com.
Perfect. As Charlotte mentioned, we will be putting that in our show notes. So if you guys want to reach out, just click a little more in the description. It'll pull down that full description. In there, you can find Charlotte's link. All right, that wraps it up. Charlotte, thank you very much for hopping on the show.
Thank you so much for having me.
Absolutely. For everybody who's here with us today, thank you guys for showing up. You are the reason we do this. So if you guys have any questions whatsoever, reach out to me, Gabe at therealestateinvestingclub.com. And as always, if you guys want to support the show, all we ask is you give us a like, subscribe, share, all that jazz. Other than that, I hope you guys have a great week. Keep rocking real estate, and I look forward to seeing you on the next episode. All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at gabe@therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.